If you're sitting here in 2026 wanting to start trading options and every tutorial you've seen is either explaining what a call is for the entire 30 minutes or just a video full of nothing, jack, zilch, zip, nada, for the entire time, and at the end that you're gonna promote a course for you, well, you've made it to the right place. I've been trading options for close to a decade now, and over that time when I was first starting out, my first few years, I went from a concession stand manager making $10 an hour to within a couple of years managing over $40,000 in my portfolio. So in this video, I'm going to be walking you through 8 different steps for how you can place your first options trade with the utmost of confidence. Don't miss out. I'm telling you right now, you don't want to miss out, because if you skip a single step in this video, you'll be right back in 6 months in the exact same place you are now. Let's get into it. Part number 1, open up your account, get approved for options, then switch to a cash account. Now, this part number 1 really isn't just one step, it's 3 different ones built inside. And almost every beginner that I've seen, especially that I've seen on the internet when they're first getting into it, they know about part 1. They know part 1, step 1. But the second and the third, they might know a little bit about the second, or they might usually forget it. And the third, they don't even know about it most of the time anyway. So to kick everything off, you're gonna wanna pick a beginner-friendly brokerage. You don't have to choose Charles Schwab like me, even though I would recommend them, but there's Robinhood, there's Webull, Tasty Trades. You have your pick of the litter there. And if we're really getting into it, I would honestly suggest Webull or Robinhood for you all, because they have the best interface and they are the most beginner friendly. And let me tell you all this too. My own mom, my own mother, she trades on Robinhood. She invests on Robinhood. I know if she can figure it out, you all definitely can too. And you all have no excuses to not be figuring it out. And like I said, I'm trading on Schwab. I have members who are trading on Fidelity. But the main thing is you're gonna wanna go with a brokerage that aligns with your values, that aligns with your goals, and that can get you to your goals as fast as possible without the headaches, without the confusion, without knowing how to operate and trade. But then you might open your account and now you're going to ask, well, now what? So what most of you don't know if you're a beginner, just because you opened up a brokerage account, that doesn't mean you can just, right, off to the races, Usain Bolt, you're next day trading options. No. Slow down, slow your roll, pause, hit the brakes real quick. When you open up a brokerage account, usually somewhere within it, whether it's Robinhood, Webull, even Charles Schwab, like I said, you'll be able to see there's different options. So with your access and new brokerage account, you can just invest into equity, so you can buy your favorite stocks, your favorite ETFs, whatever it might be. But then to trade, that's a whole different thing. You'll have to go to the support page, or you have to go to the settings in that brokerage. And when you go to the settings or your profile, you're going to have to apply for options trading specifically. Now, what's usually the case is when you do apply for options trading, now on a brokerage like Robinhood, it's going to be a pretty fast experience. You know, you're going to tell them how many years of experience you have. Obviously, you're going to tell them you're new. Do you know what options are? Are you willing to take the risk that comes with options trading? And there's a multitude of other questions that comes with it. But usually Robinhood, I would say your process within 24 hours versus Charles Schwab can take up to a week, because they actually have real people who are going to vet you and that are going to call you, and they're going to look through all your documents that you sent to them. I'm not sure how Webull is, but Webull I would assume is a very similar situation to Robinhood, where you're telling them about your experience and you're waiting anywhere from 24 to 48 hours before they can approve you for options. Something else that you need to keep in mind too is that when they're telling you, hey, do you want to trade options, they're going to tell you, well, there's level 1, level 2, level 3. Level 1 is pretty much covered calls, and that's all you're going to have access to, and you're not really going to be able to trade long calls or long puts, which is primarily what I do and primarily what most of my College Capital members are doing, and pretty much any other person that you're seeing who is actively trading options. That's what type of options they are trading. You're going to want access to the second one, level 2, so you're going to have to apply for that. And again, with Robinhood, with Webull, it's going to be a pretty easy setup to be able to get access to that. Charles Schwab, they're a bit more stringent, so you might actually have to talk to them and let them know, hey, I do have an idea of what I'm getting myself into, not that they just want you to lose all your money right away and poof, your account is blown. And keep in mind, this level 2 that I just told you about, this is giving you again access to the basic long calls and long puts. So to simply put it is, do I think this stock is going to go higher? Do I think it's going to go lower? Okay, let me trade in either of those 2 directions. Level 3, now that's really for more advanced people, and I would not recommend any beginner opening up level 3 access, and I don't even think they would give you access, but just if you wanted to know what it does, it gives you access to spreads, iron condors, butterflies, different types of straddles. And though these strategies can pay off, can they pay off in the long run when you're trading options? But right now, as a beginner, you don't need it. So just throw level 3, let's forget about it. That's top secret. You do not have the clearance right now. And also too, I should mention on Webull, actually, they actually require you to have a margin account and you have to have a minimum balance of $2,000. That's just Webull. So other platforms, they have different requirements. Now, once you're approved for level 2, you need to do one more thing, and that's leading us into this next step. When you open up your brokerage account, Robinhood, Webull, Charles Schwab, what most of you all do not know is that you're actually going to be given a margin account by default. That's just how it is. And I know nobody out there is telling you all to go switch. They're not going to tell you, oh, you need this type of account, but I sure will, because I promise you, I wish if somebody had told me way back then that I could have just opened up a cash account, oh, would I have avoided the PDT rules, the 3-day trades and a 5-day or a rolling 5-day limit, as they say. And just to kind of dive a little bit deeper, a cash account means that any of the money that is in your cash account or in your brokerage account, you can use that all the way up, as many trades as you want to, the entire time, and then the next day that cash will clear and then you can start trading again. So if you have $1,000, you're only able to trade, that $1,000 each day. You can make 5 different trades up until the 1,000 is used, 4 different trades, 10 different trades. It does not matter because it's all your cash. That is the beauty of a cash account. And now, once you have your cash account open, congratulations. You have the ability to trade options, and now we're ready to move on to the next part, which I know you're asking, well, Frank, how much should I be putting into my account? Now, part number 2, you're gonna fund your account based off of where you are. So again, you're wondering, well, how much should you put into your brokerage account? And the honest answer, there is no magic number. There is no minimum, there is no maximum. It depends on where you are financially in your life. And honestly, if you get this wrong, oh, you're gonna be risking a lot. Oh, you're gonna give yourself the most of headaches. One mistake I see a lot of beginners are making is that they're funding their account way too aggressively before they even place their first trade. What I mean by this is they're putting way more into their account than they can actually afford to lose just because they see some fool online flexing his gains, telling, oh yeah, I made 1,000% gains. Oh yeah, I had $100,000 day. Oh man, I made a 5-figure profit day today. That's great and all, but that's you. And then on the other end of this, the opposite side of the spectrum, there's plenty of beginners who just fund way too little. They're getting overly cautious, and honestly, they're being so cautious that they're barely taking trades or never even taking trades. And then at the times they do take trades, they lose because they're treating every trade like it's life or death. Like it's, oh, if I make this trade and lose it, that's the rest. That's it for my account. I have nothing else left. And let me hop back to the people who are actually overfunding their accounts. Let me ask you this, because this is some wisdom for you all here. If you can't manage $100, if you can't manage $1,000 while trading options, what makes you think you can manage 10,000, 25,000, 100,000? Just keep that in the back of your mind when you're thinking about funding your account. So the goal here isn't to go big fast, it's giving yourself enough breathing room to make the inevitable beginner mistakes that everybody is going to make, that everybody has used and done and paid their market tuition with, but also still living to fight another day and still living to see another trade, because there's always another trade right around the corner. Now, if you all want a bit of basic numbers, I can tell you all this. Look, if you're unfamiliar with options, or you're starting with very little working capital, decent starting point would be anywhere from $500 to $1,000. Now, if you're a bit more financially stable, maybe you have a 9-to-5, maybe you have a business running on the side, and this isn't going to be your full-time job, you're not relying on this as your primary income, well then probably funding up to $2,500 to $5,000 is probably going to be your starting point. Either way, the rule is still the same for both of you all, both of the types of beginners, because the money that you put in, always remember, this is money that you can afford to lose. Not can't, can. So whatever money that you put in, do not go in with the expectation that you're going to be making $1 million. This is money that you could potentially lose all of it, so you do not want it to ruin your life. You do not want it to ruin your savings. You do not want to go into debt by having had lost this money. Now, you got the account, money's flush in the account, now you need to set up your workspace. And this takes us into part number 3. So here, this is where we're going to be setting up your tools and your platforms. And let me tell you all this, I'm not here to promote some type of trading service, some type of brokerage, some type of prop firm, some type of indicator. I'm telling you all right now that as a beginner, all the tools that I'm about to mention, and in general, as you all are starting out, you can start for free. You do not need to have any subscriptions. Again, I repeat, you do not need to pay for any tool, any software, or some scanner that you probably don't even know how to use yet. So up first on my list that I will tell you all, go to TradingView. Go straight to TradingView. You can set up a free account, And I can promise you anything that comes with the free version, it should more than suffice for you as a beginner options trader. Now, the paid version that they have, which does come with live data and everything, that's gonna be extremely beneficial for you once you have a little bit more experience under your belt. But keep in mind, once you open up a brokerage account and you actually fund that account, most of these brokerages are gonna give you live data, so you don't need to go again out of pocket and pay for another service that's gonna charge you for live data. You already have it with your brokerage, you can just use TradingView to chart your levels. And I'm gonna tell you all right now, I use TradingView every single day when I'm trading. I've never used anything else, and I can tell you all this too. Everything that I'm giving to you all, oh, I live by it and I swear by it. Now, next up, what I will tell you all to do is set up a Finviz account. Finviz is also free. That's FINVIZ.com. That is free. I'm not sponsored by them. I'm telling you, this is a great tool and resource to have as a beginner, and really as any type of trader, but as a beginner especially. Finviz covers stock screening, stock scanning, and basically every market and ticker news all in one place, and everything for free. And again, I say, don't go out and pay for a scanner because you're just going to be paying for another distraction that you don't even know how to use. Now, I know most of you out there, you probably seen Wolf of Wall Street and you thought, damn, those trading floors, they look really fly, they look really cool, they look, whoa, what is that? Secretaries, the countless phones, the money, the salesmen, the fly suits, everything. And I can tell you all this too, because of other movies in the past too, I thought, well, even though I'm not working at a firm, I've had my own personal setup and workspace, and I thought, yeah, it might need to be a little bit similar. I need all of the gadgets, the bells, the whistles, everything that comes with it, as close to it as I can get. I need that. Oh, I gots to have that. But truth be told, my phone, my laptop, and or my iPad, that's more than enough. And I'll tell you, look, if you have an iPhone or any type of phone really, you can download all these apps straight on your phone. So you can have Webull and or Robinhood, either of those two brokerage apps. You can download TradingView yourself. You can download the Finviz app, or if you can't, just go to the Safari or go to the Google Chrome browser and search up Finviz.com, and boom, you got everything there you need in the palm of your hand. And keep this in mind too. I know for those of you who are working 9 to 5s, you're thinking, well, how can I do this? Again, everything you can download on your phone for free. So whether you have a break, you can step away for a little bit, whatever it might be, pull up your phone. Like I said, you can pull up your phone, you can look on Robinhood, you can trade on Robinhood, you can look on Finviz, you can do everything you need to in terms of charting on your phone from the palm of your hand. You do not need to have some massive setup, 6, 7, 8, 9 screens, everything going crazy all at once, you know, all the information just seeping in, just overwhelming you. And I tell you all this too, trading off your phone, honestly, it makes life a lot more easy because you can be on the go, you can sit down, you can just find a little Wi-Fi point, you can get your trading done. You don't need to sit at home and make sure your setup is good to go and have the laptop up, the iPad up, you know, your full desktop up and say, oh wow, okay, now that everything's finally good, tooted and booted, I can start trading. No, have your levels already charted, you can already have the alert set, and then boom, get the alert, trade on your phone, and out, you're done. So I say all this to say, for all you beginner traders out there, or those of you looking to get into options trading, you don't need some crazy setup just for you to get into it. You don't need some crazy setup just for you to make some good money. Now, I will say this, a phone alone isn't going to justify everything, because if you actually can't swing the bread, if you can't get the cash for it, you probably should invest into a good laptop or a good iPad, because you always want to be able to double check and cross-reference at the same time. You don't want to have one app open on your iPhone or on your phone and then close it out and then go to the Robinhood back and forth. This little bit of delay, this little bit of latency that you're about to see, oh, I'm gonna tell you all right now, that could be the difference between you making a great trade and losing out on a great trade, or getting into a good trade but then it turning into a loser because you were not able to get in and out fast enough. And if you just have the two screens, you can really just look real quick in out. You don't even have to worry about closing down the app, opening your next one. But again, it's not necessary. It is extremely helpful though. Now, once you have all this covered, once you have all your apps set up, all your accounts set up, you know, you've attached your Gmail, whatever it might be, you're good to go. So you're going to want to know now, what do you actually trade? Part number 4, picking what you're actually going to trade. And this, oh my friends, this is where the fun begins. Now, maybe we're not entering our first trade yet, but I'll be damned, we are getting very close to it now. Your task now is to then pick what ticker, what stock you actually are going to trade, or what ETF you are going to trade. And I know it seems simple when you say it like that, but there are actually a few more steps than that. Now, when I say pick a ticker symbol, I don't mean just going straight to the first quantum stock that you've heard on X or seen somebody on IG talking about. Definitely, we're not picking any IPO stocks like SpaceX and just, oh man, I'm gonna make so much money off of it, it gapped up, or oh man, I saw this name as a pre-IPO, so let me go ahead and look to trade it. No, we stay away from those. You're definitely not gonna go to any companies that are falling apart, because I know for a fact you're probably gonna find some penny stock where you're like, oh wow, this stock is down 99% over the last 3-5 years, so there's no way I can't just short this to zero. There's a reason there's low float, low volatility, and just in general low OI on those names, because nobody's traded them. They're dead in the water. You're just gonna tie up your money unnecessarily for what, making a couple pennies? You're definitely gonna wanna stay away from these overly hyped meme names. So right now, there's not too many of them, but back then, back in 2020, the COVID times, GME, AMC, everybody was trying to trade it. Everybody was trying to make money off of it, and some people did, but ask how many of the people held for too long, didn't get out, they did trade and they lost. There's more of those stories than there are the profitable ones. And forget penny stocks entirely. I don't even care if Jordan Belfort loved them. I don't care who told you, Timothy Sykes or whatever. No penny stocks, just stay away from them. That is not how we are going to make money options trading. You should only be looking for quality names that you've heard of. So the Apples, the Teslas, the Nvidias, the AMDs. It doesn't even have to be those. It could be Google, it could be Boeing, whatever you might need, whatever you heard, whatever product you're using or service, like Netflix, for example, Roku, Spotify, Nike. These are going to be some of the names that you can actually look into and put on your watch list. Now, I'll be honest with you all. You don't want to have analysis paralysis and a million screen names and ticker symbols just going across your feed all at once. Just stick to 5 or 10 names that you like, that you're comfortable with, and that you know about. Now, you're not just going to pick a batch of winners. You're going to want to give yourself a small, repeatable universe just so you can learn from it. So here's how you should structure your watch list a little bit. The first thing I tell everybody, every beginner, is make sure SPY, SPY, and QQQ are the first 2 names that are on your watch list no matter what. These 2 are the biggest and best ETFs. They are exchange traded funds, and they are a basket of the best names that are performing and outperforming the market on a regular basis. So SPY, for those of you curious, is going to be tracking the S&P 500, and then QQQ, that's going to be tracking the NASDAQ 100. And let me tell you all, with the pricing, the spreads, the volatility, just in general, the money you can make off of them, these are some of the most beginner-friendly names that you can pick to look at. Now, like I said, the other 8, fill all of these with 8 other names that you've heard of from sectors that are reputable, from sectors that are going to either perform in line or outperform the market altogether. This can include mega cap, i.e. blue chips and or big tech stocks. Again, it doesn't necessarily have to be AI, but semiconductors are going to do well. Another name for you all, Taiwan Semiconductors, TSM. You have your financials and your banks. There's the consumer cyclical names that everybody knows about, the Home Depots of the world, even Tesla. I know, sounds crazy, but Tesla is a consumer cyclical name. And then you also have energy names that you can trade. And just a quick note, when you're on Finviz and you're looking and you're picking up everything and you're looking for names to add to your watch list, keep in mind that consumer cyclical is actually the same thing as consumer discretionary. So just keep that in mind when you're on Finviz looking those up. Now, everything that I've given to you all right now, all these different names, all these different areas you can start looking into and doing your own research on, they're beginner friendly and they're extremely liquid. But at the end of the day, you choose what you trade, and I can't do anything about it. I can't tell you what to trade, how to trade it. That is on you. Now, everything that I walked you through so far, like setting up the brokerage account, getting the options level approval, actually funding your account, these are just one part of the puzzle that a lot of beginners, maybe even you might get right, but a lot of people who are getting into it, they're stubborn, and because they're only trading alone and they're only looking to trade alone and only looking to do it by themselves, they'll fail because of that. Truth be told, flat out, they're gonna fail. They might be here from this month to the next month, but then what happens in the next 3 months? Or they might see, oh, I'm getting a little bit of progress, and then they go and blow up their account just because they're trading alone. And that's the whole reason why Cobb's Capital exists. Inside, you have 3 analysts, not including myself, who are going to be doing live sessions and workshops every single week throughout the week for you all. They're also going to be doing one-to-one private sessions as well for the members who need a little bit extra help. And then of course the entire Discord, is packed out with the utmost of resources for you all to learn from, to profit from, and just to use to study to be able to level up from one step to the next, from beginner to intermediate to expert. And if this sounds interesting to you, well, good thing. I'll put the link in the description for you. Now, back to the steps. Because having the account, having the money, and having the names means absolutely nothing without this one thing that separates trading from gambling. Part number 5, come up with your plan. You need a plan. And now this here, this is what separates the traders from the gamblers. Most of the people who are beginner traders, most of the people who are going at this alone on their own, they're waking up, rolling out of bed at 9:30 or sitting down wherever they are right at 9:30, have not even checked the screen, charted the name, pulled up any levels, open that Robinhood, Webull, and they're looking to trade any and everything that they can find. And as they're doing this in real time, it might be great and all. You might be like, I'll save myself some time, but I don't know if you all know this, but that's not really a plan. I can promise, if you're a beginner doing this style of trading, the trades you do take, you're in a panic, you didn't research them, and you're probably going to lose money off of these trades. And let me tell you all this, from someone who is a profitable and professional trader, I can promise you all, I can swear to you all, that the preparation that you do away from the actual markets, that you do away from the live trading, this is what sets up everything for you to profit while that screen is open and while everything is live. So I can suggest to you all, similar to me, you can use a little bit of time over your weekend to start setting up your strategies and going over your setups to prepare yourself for the week ahead. So this can include what you're watching, what market news we had last week, or what market news we will be having coming out this week, or for your specific watch list, is there any particular news coming out next week or this current week for what you're going to be looking at, or what is going to be coming out tomorrow for what you're looking at. And also, evenings work too. I do a lot of my trading over the evenings because I have so little time, and I can tell you all, this works too, because you just don't want to be the person who the only thing that you've done is you rolled out of bed or you woken straight up and you got into it without any preparation, without any planning, and without any damn strategizing. The reason why this is probably going to make you profitable in the long run is because you're preparing, you're charting, you're strategizing when you're at your most calm state and your most neutral state. No emotions attached to it, no money attached to it, no nothing. You're looking at the market objectively, cool, calm, and collected, and from there, you're able to take the best trades. You're able to make the best decisions. You feel me? Now let's talk about risk. When you're getting into a trade and you're deciding what that risk to reward ratio should be, the first thing you're going to need to think about is what are you going to be risking per trade based off of the account size that you do have. If you funded your account with $500 to $1,000, you're going to need to have a number. Same thing too if you have $2,500 or $5,000. And what I say by risk per trade, well, if you have a $5,000 account, hell, even if you have a $1,000 account, you're not gonna put all that $1,000 or $5,000 into that one trade. Split it up, be strategic, be concise with what you're doing, and make it make sense. The math will always make sense. You're not gonna sit here and make $1 million out of $100, but I can tell you right now, you damn sure ain't about to do anything with that $1,000 or $5,000, putting it all on the line in one trade. Oh, no, no, no. And also, when you are starting to trade and you're getting into these trades, have realistic profit targets. Please, I beg if you have realistic profit targets. You're going to get into it, and I don't want you guys to sit in the trade and say, well, if I made 100%, why can't I make 500%? Well, I could have taken profit at 1,000, but if I done made $1,000, I could make maybe $10,000. No, you're a beginner trader. That's not how you're thinking. That's not how you're supposed to do it. You're looking to take every win that you can, stack it, compound it on another, and then you're supposed to create an account that is exponentially growing over time. You're not looking to double, triple, quadruple, whatever the hell your account in the next day, the next week, the next month. No, slowly but surely build it, understand what your risk tolerance and risk aversion is, and then once all these factors start coming together, you can start risking a bit more. But again, as a beginner trader, play it safe, because I promise you, most of the people who are beginner traders, they're only moving to intermediate level or expert level traders who are actually profitable over the long run if they started out slowly. Most of the people who came in hot, word to John Locke, they came in hot, they had the streets on lock, and they thought everything was sweet. They thought, I could throw it into any trade and make tens of thousands, fives of thousands, whatever. They here today, gone tomorrow. I seen a million John Locks, and I can promise you, you don't want to be that person. Now, what we just went over, it's cool and all, but again, this all only matters if you follow and stick to your plan when the money is on the line. And that's what we're actually going to be talking about next. Part number 6, getting your emotions in check. An emotional trader is not a profitable trader, full stop. Let me tell you all, this isn't about killing or just throwing out all your emotions or taking some type of therapy to get rid of all your emotions so that you are just pure, cold, calculated, like some type of psychopath. No, that's not what I'm telling you to do, nor am I telling you that's what is normal to trade like. No. Again, I've been in this business for damn near 10 years, and I can tell you all, even now, when I'm putting my own hard-earned money on the line, my heart rate still goes up. Y'all see, I got the Apple Watch. It's telling me that heart rate, that BPM is increasing. It's normal because this is hard-earned money. This is real money. Now, I know some of the people who trade demo accounts and the fools who just do Photoshop, it don't matter to them because, hey, them just fake numbers. But for me, for you all, it's real money we got on the line. So you're not going to be able to fully remove all emotions from every trade that you're making. Options trading is an arena where fortunes are made and lost in minutes. So it's natural that your emotions are going to be running high. Oh, I know you're going to be feeling every bit, every second. It's going to feel like an hour. Every tick is going to jump the heart. I know, I know how it is. But the skill here is not in feeling it. It's just not letting your emotions drive your decisions. And here are the 3 emotions that wreck all beginners. They're always the same. First up, that's overexcitement and greed. That's gonna make a lot of you beginners overconfident and arrogant. You start thinking you can't lose, and boy, does the market come and humble you real fast. Oh, I know. Oh, you get overconfident and greedy, you're gonna start hearing them saxophones get louder and louder and louder. Fear, well, this is just as dangerous as greed, and this is because fear is gonna paralyze you. It's gonna make you afraid to even enter the trade that you had planned for, or you're just not even gonna trade it whatsoever. And the third is nervousness, and this, oh, it's gonna make you bail early. Well, not just on most, probably all of your trades. You dump a winner, or you close out a position at a loss or at minimal gains, when if you just stayed in the position, it would have worked out according to the plan that you had already cooked up. Oh, and I'll tell you all exactly what an emotional day looks like, because I've lived it. I'm living proof. So I talked about this in my previous video on 0 DTEs, but there was a day, oh, was I overconfident? Oh, I was cocky as shit. Ooh, you couldn't tell me anything. And I remember the Friday, oh, like it was yesterday. I immediately got into Tesla puts, and this was when Tesla was way different than it is now. They had not done any stock splits, and the way Tesla moved, I mean, you might see it now, you know, it might have a nice $20 to $30 day. Oh, back then, Tesla might have a $50, $80, sometimes even $100 day. Oh, Tesla was beautiful to trade. Now, when I did get into the trade, immediately, first off, it was at the open, but right after, okay, 9:31, sure, but still, damn near at the open. And when I got in, oh, within, let's say, the span of 2 to 5 minutes, I was already up $7,000. So you can imagine how much I put into these put contracts. Now, most of you thinking, well, if you went up 7,000 that quick, you probably should have taken it. Yeah, most people would have. Most of the smart people would have. Most of the people who had removed their emotions would have. I was emotional, and again, I was overly confident, I was greedy, I was cocky. What was I thinking to myself? Bro, if I made 7,000 this quick, you think I can't, you know, wait a little bit longer, make 20K, wait a little bit longer, make 30K this quick? 2-5, oh, you couldn't tell me anything. So instead of doing the smart thing, closing out the Tesla trade for 7K, going on about my day with the profits, well, I held too long trying to chase what gains I might have been able to make, and those 0 DTEs turned against me very damn quickly. And that is how I took 7,000 up profits, and it turned into a 20K L that, oh, shit burns me to this day. Now, have I recovered? Absolutely. But, I mean, look, it still stings. And I can't say this, the silver lining is, I would not have this story to tell you all, but this is just a cautionary tale to show you all, look, being too emotional when it comes to trading, oh, it clouds your judgment and it turns you into the worst of the worst version of yourself, because at the end of the day, we're not here to become rich the same day. We're not here to get rich that next day. Look, it's a gradual process, and I'm gonna tell you all this, fast money goes just as fast. And I'm gonna tell you right now, if you think, oh, you can just make fast money, you're not gonna have the same exact losses, oh, you are wrong. You're gonna wanna protect those as fast as possible, and you're just going to want to build up slowly, steadily, and become profitable over the long run. And again, from this story, let me tell you all, 0 DTEs, those are not what you all are going to be wanting to trade. And again, it's not just about Tesla, it's just the style of trading, the over leveraging, the being too emotional. Just stay away from this as a beginner. And if you're really looking to make money as a beginner in terms of the expirations on your contracts, you can look at the weeklies, you can look at the monthlies, you can look at 2 weeks out. They even have it now to where you can go midweek expiration. So instead of trading, 0 DTEs, you can trade Wednesday expirations, Friday expirations, or the next Monday expirations on some them names depending what they are. Get those reps in that way. Safer, way less stress for you. I can promise you that. And you're not risking anything crazy by trading 0 DTEs. And now we're actually going to go over how you get into the trades. Step number 7, you're going to execute the trade and execute patiently. Beginners, you all are making the same mistakes. You're entering too early, you're chasing too late, getting greedy, or you abandon the plan altogether. You abort mission as soon as the trade goes just a little bit in the direction that you did not want it to go in. Look, just let the setup come to you. The names are all on your watch list already. You should already have your alert set up. Just wait, chill out. Just let the trade come to you. You're only going to take the trade when the plan setup reveals itself. Most of the days, you're just going to take 1 to 2 trades. Look, we're snipers in this business. We're not machine gunners. I don't care what anybody says. If they're sitting here making 200 trades a day, 94 trades a day, however many trades they make per day just to get $2,000, $5,000, that's not where we want to be. We want 1 or 2 trades, and we want to make the bulk of our money within those 1 to 2 trades. And now, the setup shows itself. You're ready to pull the trigger, but how you actually enter and exit, well, this matters a little bit more than you think. So there's 2 types of orders, and this is going to be on both the buying and the selling side. And this is market orders and limit orders. Market orders basically put you at the mercy of the seller, the people who are writing the options contracts, or the people who are holding the options contracts for that matter. And it's basically you telling brokerage, I don't give a damn, here's my money, fill me at whatever price you can find me as fast as possible. Limit orders, on the other hand, well, this is you telling the brokers, this is you telling everybody else who is in the arena with you, look, I'm willing to take this trade, but only at this price. Only at this price. No, I'm not paying your price. I'm not looking to get in right away. If it happens right away, that's great. But if not, no, I'm paying whatever I want to pay. You dictate your terms. And that's what a limit order is. Limit orders, oh, they can be so lovely, especially when you're ready to sell and you get filled for what you want to get filled for. But I'm gonna tell you all now, if you got filled at a good price and you're just looking to get out for decent profits and you're not trying to sit here and fumble with the numbers and do the calculations, a market order is fine too. You might cut into a little bit of profit, but as I always tell people, some profit better than no profit. The profit that you did make is more than you started that trade with. It's more than you started that day with. Think about that. And also, let me tell you all this. If you got a bit of time, or let's say the stock might be chopping around a little bit, then this is when you can look at the bid-ask spread, and you can start looking at, okay, where the bid's at? What's the range for the bids? What's the mid at? What can I start looking at for the midpoint? Oh, what's the ask at? What can I start looking at if I was looking to sell? Or what is the ask looking like if I were to sell in the future? Now, me personally, Charles Schwab makes it extremely easy to be able to do limit orders. But on Robinhood or Webull, where you're basically just swiping up and getting your order filled, you might want to stick to the market order because you might be swiping and swiping and swiping and that limit does not get filled. Or you might be sitting here trying to type in that actual limit order and you see the price just keep on jumping above your limit or below your limit and you're like, okay, I'm not getting it filled. So again, that market order might be better for you, but for me, 9 times out of 10, I'm using limit orders on both my buys and my sells. And now that you've placed your first trade, that's great and all. Oh, congratulations to you. But what do you do after is the next question, because you shouldn't just go straight into looking for another trade. Part number 8, the finale, review and refine. Whenever you finish a trade, whenever you get that heartbeat back to the normal range, you should go and review the trade that you just made. You can get lucky on a trade. You can get lucky for a week. Oh, I've seen people get lucky and go on win streaks for a month. But when your luck runs out, and it always runs out, and luck runs out, and you haven't done any work, you'll be left with nothing, and there will be no profits to show that you made any type of progress from then till now, from then till whenever you did say you were profitable. If you don't believe me, let's look back in history real quick. So back during COVID lockdown, when everybody was trading, when everybody had work from home, ask yourself how many people were options trading, how many people were running their own discords, etc. Everybody was a profitable trader during COVID. How many of those profitable traders are still around today? If you think that luck can't run out, use that as another cautionary tale. Now, I'll say this, back when I was first getting started, well, reviewing, this was really a manual thing. I mean, sure, we did have computers and everything. I'm not saying I was living in the Stone Ages, but it was a grueling process. Oh, excruciatingly long, and this took many hours. Guys, you all have Claude, ChatGPT, you have Gemini. You can literally go condense your learning. You can condense the reviewing process into minutes and hours. And I promise you all, those of you who are out there using the AI and using it to your advantage, oh, you're going to accelerate and become profitable in a much smaller time frame than the ones who are without it, or just in general, the ones who are just never going to become profitable. So when you go back through your trades, do this. Look and see why you entered the trade, why you took the name that you did, or why you traded the name that you did. Also, in terms of entering and exiting, why did you enter where you did on the trade? Why did you enter the setup where it did happen or when it did appear? And then why did you exit? Why did you collect profit there? And I really want to say all this to you all. Look, the wins are great. It's always great to review the winners, but the losses, studying the losses, that's going to be the best thing for you. That's when the truth about your strategy and who you are as a trader is going to come out plain as day, within the numbers, within the math, and that's how you go from, again, beginner to intermediate to expert, non-profitable to profitable. And also, always review your bias. Always play devil's advocate. Were you right or wrong about the direction? And what did the price action confirm and or deny that day? And like I said, you can use Claude, ChatGPT, whatever you did. All these questions I just gave to you all these things that you should be reviewing, enter all this into the ChatGPT, into the Claude, into the database that you are using, into the AI that you are using. And once you enter all of this, then you're going to start working with it. You're going to start building a repertoire now with it because it does have a memory. So you're going to be able to say, hey, I took this trade on Monday. Look how I traded on Tuesday. Is there any difference in my trading? Have I made any improvements, or have I started to decline as a trader? Am I going to start looking to be profitable if I continue trading this way? There's so many ways you can approach it and target it. Look, you don't have to do my specific way, but again, using ChatGPT, using Claude, using whatever AI you need to, this is going to accelerate your process, and I promise you it's going to condense the amount of information and all the things and headaches that you will have, because you are going to get headaches reviewing all of this. It's going to reduce that and make you a better trader in a shorter amount of time. So there you have it, everybody. This is the full process for how you can start trading options in 2026. But everything that I just told you all, this is really just hitting the highlights. So the full breakdown of order types, the bid and the ask spread, calls, puts, delta, theta, the Greeks, and every layer underneath that is associated with options trading, all the strategies, all the information you need to know to be profitable at every level of being an options trader. I'm going to be covering that in depth in the full options trading course that I have coming soon. And let me tell you all this too. Look, if you want to cut down the learning curve even more than you have after watching this video, if you want to become profitable even faster after having learned and executed, and also to internalize this information I gave you, that is again why Cobb's Capital is here for you. And when you join Cobb's Capital, you get access to 3 analysts, not including myself. And guess what? They're doing live trading sessions throughout the entire week, study sessions throughout the entire week. They're giving private one-to-one lessons to all the different members when they are requested. And in the Discord, everything is beautifully built out for you all from A to Z, so that you can find anything you need, any resource, any bit of information, you all have access to it there. So the link to join me, the link to join Cobb's Capital is in the description, and I'll catch you all in the next one. Peace.